Well, good Monday morning. Thank you for joining us today. I'm Marlon Bowling with you, your tour guide to the ag commodities. And it is a Monday morning, so we start out with a clean slate. We'll see how the markets want to perform this week after we had a crazy week last week after the WASDE report came out. Now, we have some new information that just came out a little bit ago. We had some new overnight export sales to talk about. And I want to bring in our guest analyst, Mr. Brian Hoops, in just a moment. So here we go. Corn, 200,000 tons that were sold to Mexico. And soybean meal, we sold 183,000 tons to the Philippines over the weekend. So some nice amounts showing up right there. We're starting to get a little bit of a stack of export sales lately. Brian, what do you think of those numbers?
Good morning, Marlon, and welcome back and happy birthday. I understand.
Oh, thank you.
Yeah, it's good to have you back. Corn sale this morning to Mexico. Great sale. Our exports are running way behind last year's pace, and a large portion of that is due to China being largely absent from U.S. Corn products and not buying really anything from us. But Mexico is trying to make up a large share of what China has not been buying. So sales this year to Mexico are about 40% higher than they were a year ago, about 20% larger than they were 2 years ago. So Mexico's really come through for us, and I'm not sure where we would be this marketing season without them. It's been a real disappointment, but Mexico keeps coming in, and seemingly we're putting in some sort of a harvest low here in this corn market. I don't know how great a rally is going to be this year because of the big ending stocks that we have, and overall demand pace is fairly slow, but I think we are going to not fall as far as a lot of people had expected because of some of this demand. Of course, you had some business here with soybean meal. NOPA crush report comes out today. That'll give us an indication of demand for the meal, but Argentina largely out of the market as far as any export business goes, and the U.S. is taking a large share of that as far as exporting meal this year.
Let's take a look at the overnight numbers then. We'll start with a look at our corn. Our quotes are provided by bar chart. On the corn, now these closing prices here overnight would have been before the overnight export sale announcement came out, okay? So we had December corn a penny and a quarter lower at $4.92. Now that was toward the lower end of the trading range, just a couple of ticks away from the overnight low. Meanwhile, on soybeans last night, they didn't know what to do. We had a little bit of a firmer tone on the nearbys. November only up a half cent at $12.80 3/4, well off of its overnight high by nearly 9 cents, a little over 8 cents actually. January was up just 1 tick. The deferreds were fractionally weaker overnight. And on Chicago wheat, we had December 2 3/4 higher at 5.82 1/2. This wheat market has been jerked all over the place here the last week or two. In Kansas City, well, it was down a penny and a half at 6.67 1/2. That'd be off of its overnight high by about 6 cents, and it was on the low of the overnight trade. I wanted to point that out. In spring wheat in Minneapolis, December was 3 higher at 7.25. Now there, we were in the upper half of the trading range. Isn't that interesting how Minneapolis wheat performed much better than KC wheat? Any thoughts why, Brian?
Yeah, we're such a low volume type session and very limited news for all these grain markets that we're seeing a lot of intermarket spread trades. So you're seeing Kansas City lose out to Minneapolis, they're losing out to Chicago. There's been good moisture across a lot of the plains areas, and it's really kept the Kansas City wheat near the bottom end of its trading range. In fact, right near the lows that we've been trading at because of prospects that we're going to be off to a good start as far as the winter wheat crop goes. And then going into dormancy in another several weeks, it looks like we're off to a pretty good start for the growing season.
I want to take a look at the cotton market and some of the outside trade too this morning. On the cotton, they kind of took a thrashing overnight. December down 121 points, all the way down to 84.85 per pound in that overnight trade. For those of you watching the crude oil trade, we have the West Texas Intermediate crude a little bit weaker. It did bounce higher as I was coming into work, and then it reversed out and went a little bit lower once again. U.S. dollar index has just been flying high lately, and even though it's down 234 points right now, December futures are still above 106 at 106.200 right now. The Dow Jones Industrial Average is higher by 229 points. We'll come back and we'll talk with Brian Hoops, and we'll take a look at our livestock trade to open up the week right after this. All right, we're talking with Brian Hoops of Midwest Market Solutions, and he rejoins us right now as we change our focus and take a look at our livestock trade here to open up the week. So are we going to be looking at anything different this week, Brian, than what we did a week ago now?
You know, the cash trade last week was a little surprising that it was as strong as it was, a couple dollars higher in the north and at least $1 higher in the southern trade, maybe $2 higher in a lot of instances. I think it caught the trade off guard, and we saw some, big rallies middle of the week. Now, we did see a slowdown in our slaughter pace, which I think we have to expect again in the upcoming weeks as packer margins still deeply in the red, about $75 negative. So they cut the kills down to about 613,000 last week. That's not usually bullish for the cash markets, but it does appear that the packers are very short bought. We have a cattle on feed report again this Friday, and the estimates we were floating around are all below 100% as far as on feed and placements and marketing. So it looks to be overall a very constructive report once again, highlighting that the supplies are tight and not increasing, and that's probably going to be the case for the rest of this quarter into 2024. So, we just have such a tight supply issue, but the packer margins negative, trying to keep the cash markets from exploding higher because of those negative margins.
It just seems weird that we continue to have numbers lower than 100% almost each and every report. I mean, it just seems like we can't continue this pattern forever. Sooner or later, we have to base out.
At some point, we will start rebuilding the herd, and maybe it comes through the winter months. I just don't see any signs that we've done that this summer. There was a lot of areas that were in more drought-like conditions, and unless you have that grass in the pastures and the feed source, there's not a tendency to rebuild these herds. So it's going to take some time. It just doesn't happen overnight. It could be well into 2024 before we see a lot of evidence that the herds are being increased in size.
Let's take a look at how we finished up in the market last Friday then on the live cattle board here. These quotes from bar chart show triple-digit losses on everything beyond the October contract. December was down $1.05. It finished the week at $186.75. And, that was only 15 cents from its low of the day on Friday, so not a very strong close. Meanwhile, on the feeders, wow, you had the October down $2.15. November was down $2 at $251.57. And you had January and March both over $2 lower as we wrapped up last week. On the lean hog segment, we had the December contract down 60 cents. We were at $69.50. And we had the February contract 67 lower at $74.35. Any opening call on the lean hogs this morning or not?
I would have to think we're going to see a little bit softer just on some follow-through selling marlins. So it could be real choppy in the livestock to start off with here this morning. Maybe some follow-through in both the cattle and the hogs, but then you do have the stock market moving higher. So probably some buying interest to come into that cattle market.
All right. Well, good stuff there, Brian. Thank you for talking with us here this morning. Always a pleasure, and we'll talk with you again here real soon. Brian Hoops, president of Midwest Market Solutions, with us from Springfield, Missouri here this morning.